Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to follow up on some analysis we were doing in our MTPredictor training room yesterday on the 3-minute NQ, in particular to show how we look at our setups across multiple time frames. But as usual, we have to start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. I'll put that another way. All professional traders know and understand, but more importantly accept that losses can and will and do unfold. That's important to understand. There always will be losses no matter what approach you do to the markets. Losing trades are inevitable. Right, let's have a look at what we were looking at yesterday, and I want to go back to, I'll use our training mode and I'll jump back to about here. And in our training webinar yesterday for MTPredictor customers, we were looking at this particular TS1 cell setup here, and we were deciding on whether this was a good one to take or not. Remember, we were doing this in the webinar live at the time yesterday. Now, can you see how I'd already put on the chart, the 15-minute DP support from the 15-minute chart, and see how that basically, if I put the session breaks on, basically that had held the low of the day so far. Our MTP trend was black, turning to blue. It just turned blue. This setup came in. So can you see how this sell setup was against both our MTP trend color, but more importantly was against a market rallying off potential support. That's the most important thing, is that we had support here from our higher time frame DP. Therefore the larger trend will be deemed up. Therefore we'd want to be avoiding our sell setup. So if we go forward, you can see that this would have actually been just about taken into a trade if I do my analysis here, and then stopped out straight away. So as you can see, that was a good decision to avoid that sell setup because the larger trend was up. If we move forward a bit further as well, we can see we had another TS1 sell. This looked to be going well, but again our MTP trend was blue. But more importantly, can you see how we were coming up off this higher time frame DP support? So again, this sell setup was against our large degree uptrend. So if we move forward, there we can see it's actually been stopped out at those points there. So it would have actually been stopped out and would have been a losing trade. If I clear everything off, you can see that we had a history triangle on here to verify that. So when you're looking back, you can see the history triangles are there. So you can right mouse click, put the analysis on the correctly colored reversal bar, and see what that would have actually done at the time. So of course now the situation is basically remains unchanged. This is basically after the webinar had finished, and basically because the 15-minute support zone was still here, the large trend was still to be deemed to be up. So if we just move forward in time, a bit later in the day, where are we? A bit later in the day, we get a TS3, W3 or Wave 3 trade setup. So the question being is now, is this a good trade setup to take? In other words, is this in the direction of the large degree trend? Well, our MTP trend color is blue, but more importantly, can you see how we are above this large degree higher time frame 15-minute DP support zone? That's the most important thing. That's held the market. In other words, the market has made meaningful support off that level. Therefore, you shouldn't be taking sell setups as indicated back here. You should be looking for buy setups. So let's place the analysis on. Right mouse click, place the analysis. This is a Wave 3 setup. So our target would be our typical Wave 3 WPT, which is up here. And if the market gets up there, the potential profit would be just approximately 8.5 times the initial risk. Remember, we risk less than 2% of a sample $20,000 account. You can change that if you want. I've got a smaller account size here just to show you how the contract or the position sizing changes depending on what your risk profile is. So let's now turn training mode off and see how the market unfolded. Well, it did absolutely brilliantly. The market then rallied off this level really nicely, and as you can see, that left the low of the day being nailed by our higher time frame support zone there. Market went up to the typical wave 3 WPT, where a profit of approximately 8.5 R or 8.5 times the initial risk was available. If we now go back to our 15-minute chart, and we can now start to put some targets on this on our higher time frame as well. Again, I'll use our trading mode. I'll go back to about when our 3-minute buy setup was coming in and around there. So can you see that this little swing down here is the last swing into the low? Can you see this is the low, this is the last swing into the low. So this is the swing we use first and foremost. So I'd go back to that pivot high, right mouse click, do decision point. That gave you the higher time frame resistance, and as you can see, it's on the chart there in advance. If we turn trading mode off, you can see that the NQ did actually reach that level and go beyond it. Let's see what that looks like on our shorter time frame. So our typical wave 3 WPT target was just slightly lower than our higher time frame resistance, so that would again give you confirmation or added confidence that that was a good trade to take. If you've been more aggressive, you might wanted to say, well, I don't want to come out of the typical wave 3 WPT. I might want to come out at the higher level resistance target. If you'd done that, that would have increased your profit to approximately 9.8 R or almost 10 R. If you're yet more aggressive, you could have come down and looked at our MTP trend and seen that when the market got to this level, and more importantly got to the higher time frame resistance, our MTP trend was strong. In other words, it's beyond our strength band. At that point, you could have just decided, rather than to come out at that level, you'd have swapped to our ATR stop, which is our blue dots, and that would have held you in long, right up into close for a profit of almost 17 R, an absolutely massive profit. So that would probably only been for the more experienced users among you who are a lot more aggressive and were willing to let the market run a bit further. But for most users, coming out of the typical wave 3 WPT, which was here, would have been a very nice profit of 8.5 times the initial risk. But the purpose of doing this video is to show how the setups on this particular day fell in with a large degree trend. Remember, we look at markets as being cyclical. In other words, half the time they are in a random configuration. In other words, you can't get any clear pattern or clear analysis, therefore you shouldn't be doing any analysis at all. So the question being is, how do we then decide whether the pattern's clear? Well, the way we do that is we go out to the higher time frame chart. So if you're using a 3-minute chart, the higher time frame would be the 15-minute. You then look for the market making meaningful support and resistance at these levels. If the market is not, or is not in a clear pattern, you then look for another market, another time frame. If you're trading, say 15-minute Forex, you'd go out to the hourly. If you're trading, say daily stocks, you'd go out to the weekly. But it's on a higher time frame, between 3 and 5 time frames higher. Once the market is actually doing what you anticipate, in other words, making meaningful support and resistance on the higher time frame, you then come down to the time frame you're trading and then look for trades that fall in that direction. So as you can see here, it would have actually nailed the low nicely. As the market went up, you'd be avoiding the sell setups and looking for buy setups, and there was a W3 TS3 buy setup came in a bit later in the day with the initial target at the typical wave 3 WPT. There was also another trigger here just right after the open. If I place the analysis on, you can see that was a VS setup. Now normally we try and avoid VS setups that fall right near the open because VS is a volume spike, so it's fairly obvious that the market volume just after the open is going to be higher than normal, and you very often get VS setups on the first bar or the first couple of bars after the open. So you probably want to avoid those. So there you go, a good example of actually how best to use MTPredictor on multiple time frames. But the reason I wanted to do this particular example was because we were looking at these setups, these sell setups here, in our live training webinar yesterday. So we were evaluating these at the time as they were coming in. So it's nice to see that they did was correct to avoid those, but also then to see how a bit later in the day we had a nice buy setup that came in, with everything coming in together with our MTP trend and support at the higher time frame DP support zone. So in the direction of the large degree trend, which produced a very nice profit of at least 8.5 times your initial risk, or maybe if you're even more aggressive and held it into close because the MTP trend was strong, that could have produced a very, very large profit indeed. So good example of using MTPredictor on multiple time frames on an example that we followed up from our training webinar yesterday.